Apecoin, the native currency of the Bored Ape Yacht Club ecosystem, hit a high of over $26 last week amid debate about the coin's governance as well as staking mechanisms. And some of those staking proposals have drawn quite a strong response. Let's talk about how the new economy firms are shaping the conversation. Mark Lamb, Chief Executive Officer at CoinFlex, a leading crypto derivatives exchange and yield platform, joins in to discuss this and lots more. Great to have you with us, Mark.
Great to be here.
Now, staking is a way for ordinary traders and investors to earn a yield on crypto assets they hold. Why has it led to so much debate in case of Apecoin? Some say that under the current proposal, staking is just encouraging people to hold on to their Apecoins and not really invest in the ecosystem.
The original idea of staking was that you were going to be doing something with the tokens. So the tokens would be contributing to security in the case of proof of stake or some other mechanism. I think Apecoin has been criticized for this as well, very constructively by Kobe on Twitter. Is basically that the mechanism is really just a way to pay existing Apecoin holders a dividend or an income stream of Ape, and the goal would be to get some of these holders to stake, not be able to sell, earn these yield, and allow other holders to cash out to sell. And so that's not really contributing anything. It's kind of like a bribe to not sell, as has been described on the Twitterverse, and obviously that's pretty silly.
Over 10,000 Apecoin tokens have been allocated for Bored Ape and Mutant Ape NFT owners. Interestingly, if anyone wants to stake their ape, the coins and the ape are treated as separate entities, and the NFT can be sold without selling the ape coin. What do you make of this?
Yuga Labs, the company behind Bored Ape Yacht Clubs, they effectively had this hugely successful non-fungible token, and they had to turn that success, or they wanted to turn that success into something secondary. Also one where if you couldn't afford a bayc, which, are 6 figures in price at this point, you could afford to buy a little bit of Apecoin. And so it's kind of seen as a way of expanding the culture. Sort of Bored Ape Yacht Club is a status symbol and a cultural symbol, but at this point, anyone can own a bit of Apecoin. And so it's kind of expanding that cultural group, and also it's enabling them to capture a different customer base. They had to do that, and but they also had to not completely sacrifice or reject or not give value to the Bored Ape Yacht Club, NFT holders. And so there's this interplay between the two tokens that exists.
On the flip side, some say that linking the Apecoin to the NFT is higher risk, as in case of a hack, you lose both assets, and questions have been raised about the failure to ensure safe custody of Bored Ape NFTs so many times. What can the Apecoin DAO do differently here?
The reason why a lot of them are hacked is that this is bringing in a lot of new money, crypto folks, new to crypto people who have a lot of money to spend on these NFTs, and they don't have a lot of experience securing their assets themselves on MetaMask. When they come in and they see this type of interface, they're not aware of the risks that come with this type of interface. And so they're not able to say, I should probably be using cold storage. I should probably be using a ledger. Like, this is a large amount of money. I need to keep it offline. That's really something that's quite different about bayc. It's not that it's any riskier than holding any other coin or any other NFT. It's just that they're high value targets. A lot of them keep them on their profiles on Twitter, and so they're easily identifiable. And then ultimately, they are not clued up on cybersecurity. And so I think this is where there is definitely an opportunity for education. There's a lot of opportunities. There's an opportunity for custody services. And this has really never been a problem before. If you think about people holding very high value digital assets in a very public way, there's a lot of people who hold a lot of crypto, but they're not public about it. There's a lot of people who've, been in the space a while, but they don't flex their net worth on their digital wrist, so to speak.
There's definitely a long way to go in educating people about keeping their digital footprint secure. Great insights as always. Thanks so much, Mark.
Thank you.